Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday the 24th of November. Starting off with AFC Energy, where we had the gap higher last week through a line of resistance from February. A bit of a bull flag there, which was nice, and broken the top of the flag there at 28.5 pence. End of day close through that should be enough to take us through to the 50 pence price channel top target. That price channel there from November last year. If you are cautious, maybe you wait for an end of day close through 30 pence, but it looks as though the stock has done enough, even though with the RSI at 87 it is currently very overbought in order to get to this current position. I got a request for the following stock, which is Eddie Stobart, and here it's actually a good time to ask about it, given the way that we're just broken the 200-day moving average at 11.25 pence. We've also broken, post-April resistance, neckline resistance there at 10 pence, above 10 pence, looking for the top of that March trend channel at 21 or even 22 pence over the next 2 to 4 weeks. But 10 pence hopefully will hold, and the shares will remain above that, ahead of that potential near doubling of the share price. Stock which I don't think has got much airtime here of late, or if ever actually, is Global Ports Holding. A couple of days late on this, in fact a few days late on this. The real breakout here was the break of that July resistance line around 80 pence. But then we broke the 200-day line around the 90 pence level last week. Current situation is that we seem to be making a beeline towards that line of resistance from April, near £2, which was also support on the way down in February. So that, even though that's quite an ambitious looking target, that looks as though where like the destination for the shares over the next 4 to 6 weeks. Stop loss probably at the moment, and end of day close back below today's intraday low at 106.5, if you can afford that kind of rather large stop. And next one is Hurricane Energy, which is starting to rise along with the other oil and gas plays. Obviously, crude oil recovering quite well at the moment. Hopefully, will help the minnows as much as the larger plays. Obviously, neckline resistance there at 3.8 pence. That's from the turn of I suppose the end of September. While we're above 3.8 pence on an end of day close basis, looking towards the top of that rising trend channel from August, as high as 8 pence, hopefully by the end of next month. Stock which has gone very well in terms of rather simple charting techniques is Invinity Energy. Broke the 140 resistance area and that line of resistance from June a couple of sessions ago, and looks as though we're heading in a near vertical fashion at the moment up towards that May resistance line projection, currently pointing as high as £2.80. Again, that would be an end of year destination, end of December destination for the stock. In terms of the stop loss, probably the high on Friday at £1.63 is about the nearest you can manage. Obviously, you could also go for that area of the yesterday's low, which was £1.59. So something around that level, aiming for £2.80. If we can manage that by the end of the year. Good to see Pembridge back. I know there's quite a few investors check out this situation here. Pembridge Resources breaking that line of resistance from October. Hope we had a slight false start on Friday, but breaking that line now properly and above the 50-day moving average at 3.65. We should at least retest that 5.38 pence high from June. And the big target here up towards 9 pence, which is the March resistance line projection, and that could hopefully be hit sometime during January, but quite attractive given the way that the 50-day moving average should provide a reasonably solid stop loss, a trading stop loss for the shares. Going on to Royce, which has been a real mover, sort of a very volatile mover of late. We had that peak towards £1.40 earlier in the month, then came back down to 86, which is obviously quite painful. The gap through the 200-day moving average today at 105 is the reason for inclusion. While we're above the 200-day line, looking for the resistance line projection there from July as high as £1.40. Hopefully by, maybe over the next 2 to 3 weeks on that particular call. Eddie Stobart is next, and here we can see that, or Stobart Group rather, here we've got this flat bull flag here, which was formed after breaking the 50-day moving average at 21 pence. Just looking for an end-of-day close through 30 pence really at the moment. Probably done enough to solidify the bull argument here, but break of 30 pence could take the shares up to 45 pence at the top of the rising trend channel from August. Stop loss at this stage back below the 20-day moving average at 22.5 pence, but wouldn't expect that to be tested now, given the strong configuration we've got there over the last few days. Bit of a lap of honour for bulls of tallow oil at the moment. We had resistance line there from the end of July pointing towards 38 pence, not far short of that now, and while we're above 30 pence, which is yesterday's resistance, 40 pence or so should be the near-term destination, hopefully over the next few sessions, maybe even by the end of the week. New name for the near term is TECMO Group, and slightly different setup from the normal situation. Here we've got basically a W-shaped neckline break. So the peak there in the middle of the month was 51 pence. While we're above that on an end-of-day close basis, looking towards at least filling the gap there from last month up to 70 pence, and hopefully up towards the 85 pence area maybe by the end of the year, which is a line of resistance from September. All of that valid while we hold above 51 pence and or at least the initial November resistance for TECMO. Always fun to see Versarien rising, especially given the amount of shorting attack it has sustained over the months and years. I think we've been going on with this one. Current situation is that we're above that neckline resistance at 38 pence or 37.9 pence. While we're above that, looking for a top of September trend channel target as high as 55 pence. Probably the best stop loss at the moment, as you can see with the break through the 50-day average that we had last week, is to use an end-of-day close stop loss back below the 50-day moving average, currently at 34 pence. Nice follow through with Victoria Oil and Gas. Surprising maybe that it's managed to still hold on to at least a decent part of its gains. Consolidating here between sort of 4.5 and 5.5, so probably want to see an end of day close through 5.5 to give us a retest of this month's peak, which was just above the 8 pence level. So above 4.5, looking for 8 pence plus, hopefully over the next 1 to 2 months. Maybe that's probably our next month will probably be a fair time frame for that. Big news from Zoetic on its distribution in the US. We've had a gap higher. We were looking for 65 pence on the break of that October resistance line there. We managed to peak at 59 pence today, but we're heading towards 70 pence now at that August resistance line projection, especially while there's no end of day close back below the initial November peak at 46.9 pence. So just above the 47 pence area, could still get up to 70 pence on Zoetic. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.